Hello and welcome to this session in which we will discuss the value creation process in integrated reporting and integrated thinking. In the prior session, we looked at integrated reporting and integrated thinking. We looked at value creation itself. What is this value creation? We looked at the 6 capitals. In this session, we would look at the value creation process, and we will revisit 6 capitals because the 6 capitals, you're going to see them here in this process. So let's first by looking at a definition of a value creation process. It's a dynamic system where inputs, we're going to see what they are transferred into outputs through business activities, and the outcome of these activities influence future operation. So we're going to take this definition, which is composed of several key elements, and discuss each component separately, such as what are the inputs, how do they work, what's the transformation process through business activities, what are the outputs, what are the outcome, and this process is a circular process. We'll explain each step in the process using an example. Specifically, I would use Tesla as a company as it applies the value creation process. Once again, every time there's a list, you know what's going to happen. Farhat Lectures will go over each item of this list separately, explaining the step using an example. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello everyone. Are you struggling with your CMA exam preparation? Do you feel that your review course is moving too fast, too brief, or not covering topics in depth? Well, if that's the case, at Farhat Lectures, we can help you. We build your confidence through in-depth explanation, not memorization or reading the slides. What we will do is we provide baby steps approach to break down complex topic so you can truly learn, understand the material. How do we do so? We offer video lectures, we offer practice MCQs, we offer true-false questions, we offer exercises, we offer the notes. Understanding the material is the first step in passing the exam. Once you understand the material, you have gained the confidence to pass, and you can pass with Farhat Lectures. What can you do now? Start your free trial. You have a 2-day free trial. Take a look at it. Give us a chance. Your risk is 0. You like it, you keep it. You don't like, you cancel. Give us a chance. We can help you pass the CMA exam.
Starting with the input step or input process, this is where we'll revisit the 6 capitals. These are various resources and relationship known as capitals, such as financial capital, manufactured capital, human, social and relationship, natural and intellectual property that the organization uses in its business activities. So first you have resources capital. Think of these are the capital. If you don't know what they are, look in the prior session. We have a whole session about the 6 capitals. Now, where do inputs come from? Where do those resources come from? From different places. From what we call the external environment, raw material, human labor, people that we need to hire, financial resources, and we're going to see where they come from. For example, financial capital comes from funding and investment. So where do the financial capital comes from? So we have financial capital. Where does it come from? Well, if it's a new company and we're not making a profit yet, it's going to come from people, from investors who are interested in your product and your output. Then you have a human capital. Human capital are the people, engineers, designers, workers for a company like Tesla that they hire. Manufactured capital, factories and machinery. Where do they come from? We buy them from the capital. We buy those machinery and factories to produce the end product. And obviously we need natural resources, and those are coming from nature. Lithium, for example, for batteries and other raw material, they are produced and purchased by Tesla. So these inputs come from the external environment, investors, supplier, workforce, and natural resource providers. So the first thing we look at in this value creation process is the input. Now again, not all companies will have the same inputs. Some companies might have some inputs For example, natural resources may not be needed for a service company because they don't need natural resources. They may not need manufactured capital because they don't need this. Practically all companies would need financial capital because you need money, you need funds to do what? To run your company. Now we're going to take those inputs and we're going to transform them. So we're going to take the inputs and we're going to transform them. The best way I can explain this or give you an analogy is from cost or managerial accounting, where we take direct material, direct labor, and manufactured overhead. We take those three and we throw them into something called work in process or work in progress. And this is the equivalent of work in process or work in progress. The organization business model takes these inputs and through its core business activities, transform them through work in process into output. And think of the output as finished goods. In accounting, we have finished goods. So this process is similar to that concept in managerial and cost accounting. So the efficiency and success of this transformation depends on the quality, cost, and availability of inputs. Of course, how well you are going to transform your money, resources, people, intellectual property depend on how good is this process. So the business model may be more or less adaptable to changes in these factors affecting the ability to operate smoothly. Now bear in mind, sometimes you're going to have shortage, sometimes you're not going to have the best raw material. Well, that's gonna depend, and you're going to have to adapt to changes to these factors. If you have a shortage in lithium, what do you have to do? So on and so forth. So you have to make sure the company adapt to those changes as they are producing their product. In case of Tesla, if you want to be more specific, they focus on innovation and manufacturing electric car vehicle, energy storage, and solar product. Here's what's going to happen. They transform the input through research and development, manufacturing process, and sales operation. For example, they uses lithium and other material to produce batteries for its electric vehicle. Now, the business model, as we mentioned, is highly sensitive to factors such as availability. For example, lithium, sometimes Tesla may be short on that. The cost of production, sometimes they cannot hire enough people because the cost of production is high, or there is not enough engineers to hire, and the quality of the technology used in the vehicle. Now, also Tesla will have to adapt to external changes like regulatory shifts in its environmental policies. An example of this would be when the government takes away the tax credit that the government provide. So at some point when you bought a Tesla car, the government will give you a $7,500 tax credit. They took that away. Well, what's going to happen when that's taken away? That's going to affect the demand on the product. Therefore, Tesla will have to adapt to that change. Or fluctuation in resource cost. Maybe the lithium prices goes up. Maybe the cost of labor goes up as well if we go through inflation. So the company will have to adapt through those changes. So we'll take input, we transform the input into output. Think the output from an accounting perspective as finished goods or final product. These are the direct result of the business activities, which could be product, services, or byproduct, or waste for that matter, because the output could be waste. For example, a manufacturing company's output might be finished goods, but it may also be waste material or byproduct. What's a byproduct? A byproduct is a product that's produced as a result of your production. For example, as you are producing car batteries, you might be able to produce solar panels as a byproduct. So Tesla output include electric cars, that's their main thing, like the Model S or the Model 3, energy product, like Powerwall and Powerpack, and solar panels. They could be also a byproduct or produced directly. However, its output also include byproduct like emission and waste material from the manufacturing process. Those are negative output or byproduct that they're not positive byproduct. Now, we have to differentiate between output and something called outcome, which I will show you on the next slide. I want to make sure that the output, when you think of output, think of the car, of the product itself, or a byproduct, which is different than the outcome. Outcome are broader effect that the output have on the organization. So outcome are the effect that the output will have on the organization and its environment as well, because the outcome, the influence, could be internal or could be external, internal to the company or external. Outcome can include things like increased customer satisfaction, environmental impact, or improved employee skills. That could be the outcome of the process itself. Outcome often extend beyond the company direct control and can influence the broader context. It doesn't mean it only influences your company, it influences the broader context. For example, in case of Tesla, we're going to see it influences our other industries and it influences the environment, or at least that's what they claim. So internal outcome, in case of Tesla electric vehicle generates strong financial return, that's part of the outcome, and helps build its brand as innovative and forward-thinking automakers. So as they produce cars, they're going to generate revenue, they're going to generate financial capital, they're going to build their brand name as an innovative and forward-thinking company. That's an outcome of the output of the process. Not the output, this is an outcome. So it's not the physical result, it's what happened as a result. This is internally. Externally, Tesla's focus on electric vehicle contribute to reducing greenhouse gas emission. That's an outcome, not an output, because on the CMA exam, they may test you between outcome and output. Outcome could be positive, like in this situation. Also, Tesla consumes significant amount of natural resources like lithium and cobalt, which has their own environmental and social implication. So not all outcomes are positive. Keep that in mind. As you're using natural resources, you are depleting those natural resources. Another outcome, or to be specific, external, could be the contribution of job creation. This is an outcome. This could be within the company itself, Tesla, or helping the supply chain, because when you buy from suppliers, those suppliers will have to hire people. As a result, you create jobs for these companies. Now bear in mind that this process is a circular process. It means it keeps going and going. So outcome from the organization activities feed back into the value creation process. So if the outcome involved environmental changes, this might affect the availability of natural resources. Well, if you're affecting the lithium supply, that's going to affect your input, of course. At the same time, positive outcome, like strong loyalty and sales, might do what? Generate more revenue, which increase your financial capital, which is one of your important input. This makes the value creation a process that's circular in nature, where the status of outcome influence the next set of input. So after you produce something, okay, you're going to have an outcome. That outcome will influence the next stage, which is again starting with inputs again. So if the outcome is a good product, think of it from a financial capital. If the outcome is a good product, what's going to happen is you're going to have more revenues. What's going to happen? It's going to generate more profit. What's going to happen? You're going to have more financial capital. What's going to happen when you have more financial capital? You are going to hire more competent and more expensive and more skilled employee. As a result, you're going to have a better process. As a result, you're going to have more output, better output, more positive outcome, and the process repeats itself. So it's a circular outcome. For example, Tesla's positive environmental impact helps build its reputation as a leader in sustainability, which in turn attract more customers and investors. So if the outcome is positive, if people look at the environmental impact, the positive environmental impact, that's going to feed back into the company in a positive way. This improves the reputation of the company, and this becomes an input that feeds into the next round of business activities, leading to increased demand and easier access to funding. On the other hand, the challenges of sourcing lithium, which is outcome, it becomes an outcome, could impact the availability and cost of output, forcing Tesla to rethink its sourcing strategy or invest in new technology to reduce reliance on scarce resource. That's putting pressure on the input, which as a result, it's going to reduce our financial capital, reduce our resources. So this is a circular process that changes all the time. Now, bear in mind, this is not a linear. So you put 1 unit of positive, you get 1 unit of positive, you have 1 unit of negative, 1 unit of negative. This is not linear. It fluctuates. So the business model ability to change in its input is crucial for its success. So as the resources fluctuate and the consumer demand fluctuate, the company will have to be adaptable. And the process is not linear. The outcome, whether they are internal or external, shape the future of the input and strategies, but not unit for unit. So not if we increased our financial capital by 1 unit, we expect our product to be increased by 1 unit, our outcome by unit, so on and so forth. Sometimes you might put 1 additional unit of financial capital or any capital, and you may get a lot of outcome. And on the other hand, the opposite is true. You put 1 unit, you consume 1 unit, and the outcome might be very bad. So keep that in mind, that it's not linear. So this interconnected process helps the organization continuously generate value in a sustainable manner, but your hope is to be a positive linear relationship where you put 1 unit of input, you'll get a better outcome. But it's not 1 unit for 1 unit. It fluctuates. Your resources, your input will fluctuate, your output will fluctuate, your transformation process will fluctuate, and the outcome is the most important, because the outcome is what's going to feed back into this process. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following would be considered an outcome in integrated reporting? Remember what I told you. Outcome is different than output, and outcome is important because outcome is what's going to influence the next stage. What's the outcome of the product? A, the development of a new product. Well, is this an outcome? No. The product is an output. It's not an outcome, it's an output. It's the physical output. It's the finished good. An increase in water consumption due to expanded production. Would that be considered an outcome? You have an increase in water consumption due to expanded production. Yes, that could be an outcome, but let's look at C. Between A and B, I could eliminate A. I know for sure it's a product. Let's keep B. The purchase of raw material from new supplier. The purchase of raw material from new supplier is not an outcome. It's part of my input, buying material. Well, I can take out C as well. So I'm between B and D. Financial forecast for the next fiscal year. The financial forecast is an accounting step. Basically, you're forecasting your next financial statement. That's not an outcome. Basically, if anything, it's a future projection from the company. So definitely, that's not an outcome of what I'm doing. I'm basically forecasting, building my budget. So an increase in water consumption due to expanded production is an outcome of my production. So what's going to happen as I produce, I'm going to increase water consumption. Why? Because I am producing more. I'm expanding more. What's going to happen as a result? What's the outcome of this increase? Maybe lower supply of water in the community. That's an outcome as the result of the increase in water consumption. So the best answer will be choice B. What should you do now? You want to go to Farhat Lectures, look at additional resources, multiple choice, that's going to help you, especially if you're studying for your CMA exam or CPA exam or accounting, finance courses, or any professional certification. Invest in yourself. Farhat is always here to help.